A very warm welcome to the 5th World Bank Africa Investor Strategic Dialogue with Bankers and Investors. Today's session builds on the momentum that's been pioneered by both Africa Investor and the Bank to establish and grow a platform for public-private sector dialogue on issues and opportunities that facilitate actions and solutions to mobilizing capital and investment across the continent as an integral part of the World Bank annual and spring meetings. As many of you know, Africa Investor as an institution has dedicated itself to promoting and intermediating capital to African investment opportunities through our growing domestic and global investment partnerships and communication assets. Earlier today, we consulted with African business leaders and development finance leaders on the status and prospects for private sector development and partnership opportunities. And of course, we also highlighted some of the challenges and put our minds together about how to address them. The issues that we were tasked to advance and champion following the 4th strategic dialogue in April at the spring meetings were sixfold. The first was, how can the platform advance the issue of scaling up resources, in particular for project development and project developers working in Africa. The second key area was to engage and mobilize resources, taking advantage of the IDA round and negotiations, focusing some of those resources on private sector-led project development companies as a new model, particularly on the venture capital basis where these types of resources could potentially absorb some of the large technical costs such as pre-feasibility studies, feasibility studies. The third track was looking at sovereign and pension funds, and we were really tasked there to identify models to address the risk appetites of African and international pension funds and sovereign wealth funds to participate in African infrastructure investments at both ends, at the early stage end in terms of project preparation, and also to stimulate and importantly to pilot a series of secondary market infrastructure investment platforms. The fourth key area was access to talent in the context of being able to look at skills mapping, planning and development linked to the life cycle of infrastructure assets and how the bank could potentially work with other partners in government to champion the fact that we always hear about an infrastructure deficit and an infrastructure backlog. How can we translate that into a job creation opportunity through an education system, through training and putting the right skills in place to take some of those aspects forward in partnership with business, civil society, and the academia. The fifth area was leadership on PPI, on private sector participation in infrastructure. In other words, increasing the participation of the African private sector, which leads in less than 1 in 10 infrastructure projects, which essentially makes it the lowest level of PPI in the world. Unsolicited bids was the sort of key final area, and the need to review and create an alternate, transparent procurement framework that harnesses private sector resources to take on and champion key projects that other institutions have no specific interest to do or the resources to pursue. Ladies and gentlemen, structured around these themes of this strategic dialogue, our goal today is really to advance these critical issues which are focused on intra-African investment, mobilizing domestic and pension fund capital, infrastructure investment, and innovative platforms to engage early stage investment capital for project developer teams working in Africa. And we make the distinction there between project preparation facilities and project developers. We are really keen to support the companies on the ground because we know that they are going to be the owners and the drivers of future key projects, notwithstanding the fact that we all have access to the resources to invest. But the recurring issue and question always is, where is the pipeline of bankable projects? So we think the bank is very well placed to provide leadership and sort of champion those areas. As I say, I think the resources are there and the resources are growing, and the research is making clear that domestic institutional capital on the continent is set to increase significantly. Africa's 6 largest pension funds by asset size will nearly triple to 622 billion by 2020 from a 260 billion in 2010. And the grand projection is by 2050, this could balloon to over $7 trillion US dollars, an important source of development capital, I'm sure everyone will agree. Now, research clearly affirms that intra-African trade is a serious issue, particularly from a private sector development standpoint. And depending on whose research you rely on, anywhere between 12 to 15%. But intra-African investment is sitting at a very low 5% with a projected annual compound growth rate of 25 to 30% per annum over the next 10 years. By contrast, intra-European investment in 2010 was sitting at 82%. So we believe that with the right level of focus and prioritization, we should be targeting over the next 10 years within the continent up to and around 60% intra-African investment flows to support the continent's growth. Maktar, to achieve this, we're really calling on your continued leadership from the World Bank's Africa region team to prioritize and pursue this area and this issue of intra-African investment growth. There's no doubt that the consequences of an initiative of this nature will go a long way towards raising the continent's investment profile, where domestic capital will act as a catalyst to attract and retain global capital, and we think that's an important new dynamic. So, ladies and gentlemen, in this fifth strategic dialogue, we will hear from ministers, bankers, investors on their requirements and focus to develop and support the private sector working in Africa, and their activities more specifically in the area of PPPs. Maktar, personally, and I'm sure collectively, we applaud your commitment to engage the private sector and the investment community working in Africa in support of the continent's economic transformation, and we look forward to this dialogue platform continuing to contribute positively to focus the agenda across the bank and the private sector operating on Africa. So I'd now like to call on you to make some opening keynote remarks. Thank you.
Thank you so very much, and it's my pleasure to be again with you. And this is a great series of conversation because we are among practitioners. You know, you don't come to go to the private sector and say generalities. They have your time is very valuable, and you want to make money, which is important for all of us to grow, and therefore you don't want to waste your time. So I think that what you're trying to do is to be very practical and concrete. We had set the scene in the previous meetings. You had a very good conversation about the importance of PPPs, trying to identify obstacles and what to do. And I think it's time just now to do things and to see practically how we can advance the agenda. So I will try to be as concrete as possible and to avoid any general statement and to try to make each other accountable and make sure that we leave this room and spend this hour and coming out of this by saying, okay, I know what Maktar has to do, and I know next time when I meet him, what I will ask him. And I know also what I will be asking you next time when we meet, and we can monitor, make ourselves accountable for the good of our continent and for the development of our people. There is interesting. There is hope in Africa. There is a private sector is extremely buoyant now. There is a sense of dynamism that, as I said, when I came back working on the Africa region after many years in working on Latin America, I found a dynamism that I haven't seen for a long time from the private sector. And it was clear that when I met some young MBA student at one of the prestigious universities in the US, at the end of the meeting, I asked how many of you are planning to go back home, and they all lifted their hand. None of them give me a CV to come and work for IFC and the World Bank. It would have been 15 years ago, I would have received a pile of CVs of MBAs from the top universities, African who want to come and work for our institution. It shows that there is clearly trust in what is happening in our continent, and people are confident that they can take risks, make money, and this is a proposition which makes sense from an individual standpoint, but also collectively. And and they came with tremendous ideas. It was just amazing the creativity of these young MBA African students that I met during those sessions. So what is our role? Our role is to try to maybe help facilitating that process and creating a little bit of framework when we move to small is beautiful, to big is powerful. We've been often considering, in agriculture, that we should be doing small in Africa because it's good for our culture. We don't want to disturb the African culture and way of doing things the way we've been doing it 100 years ago. So that is the way Africa should be developing, by keeping things the way they were. And I'm not among those who believe that. I believe that culture, reality change with time, and what happened in the rest of the world in terms of transformation of the continent, transformation of our culture, transformation and adoption and influencing the rest of the world is the way we should be going. And that's what the private sector right now is doing in Africa. So I don't think that I will never be satisfied with this answer, oh, it's good for Africa. It's not good for Latin America or for another part of the world, but you African be happy with that. It's not the ambition that we have for our continent. So there is transformation is really at the heart of what we want to do today, and push for transformational project. We heard from the public side and the private side last time when we met during the spring meeting, and I'm happy to report that there is a lot of pickup on the PPPs. In 2012, we had a lot of PPPs, particularly in the energy sector. We had 22 PPPs in energy. Nigeria recently is also about to embark to a series of PPPs to help filling the gap in energy. So I think that very quickly the private sector is taking the risk, and energy is where there is a lot of needs is become one of the areas where there's pick up. How we can expand it and extend it to other sectors and make sure that we're having the same pickup in agriculture, in agro-industry, in some light manufacturing or other activities is what I think is a challenge, and learn from what went well in some of the sector and try to replicate it. So I think this type of dialogue is important and useful, because those of you who have been involved in PPPs in some countries can share their experience with other colleagues from other part of Africa and say what was the objective, what went well, and how you can take some shortcuts. Let me tell you something which is not very usual to hear from a World Bank bureaucrat. I do think that there is a question that has been a bit of a taboo question, and has been discussed not openly. And I think that we reach a stage where we need to put it on the table, which is the role of the national private sector in the development of African economies. We cannot just talk about private sector development, PPPs, and ignore the fact that today is still largely dominated by non-African actors. And what we can do to bring more centrally in that proposition, in that debate. I know that we've been accused in the past often of being institution we are favoring more foreign direct investment and cater less to national investors. And I'm listening very carefully to that, and I'm very sensitive to that. And one of the agendas that I would like to open now in our work as an institution is to see what is it in that? What can we do better to take the trader who was in Cocody, in Sandaga or other places, to start helping him moving more and more towards manufacturing sector, towards investing in productive sector, in more formal sector. What is a transition? What can we do better to help them transitioning to that and start bringing and creating that middle class in Africa that will be necessary to, in mass, to be able to partner with foreign direct investors and make a proposition of investing in Africa at a larger scale as being important. So I think that is a new area, and I think that we'll be really willing to work with you about your personal experience and what we could have done better, accompanying some of us and some of you who have been able to make that transition successfully and be able to invest in area as risky as some area in which we are. So there is some homework to do from our side, and I would like, with my colleagues here, Gev Tata, Paul Numba, and other colleagues, to start really now digging a little bit more in details about what are the institutional arrangements that will help. If I look at the PPP agenda, is still discussing with the different partners. Most of the projects are still coming from the public sector. in Africa. The public sector prepares those PPP and go to the private sector. We have much less offer of PPP project coming from the private sector. I think, and one of the reasons that I'm hearing is that there is not enough either capacity at a large scale to allow a strong production of PPPs operation and project to be brought to the public sector, towards the public sector. So what can we do? One of the questions and one of the things, if that proposition is correct, one of the things and one that I would like us to discuss is how can we help private sector in Africa to build that capacity and generate much more projects which are bankable and to be presented to the public sector as PPP operation in the various sectors. The data says that well over 90% of the sponsors of PPPs are not African actors. So these need to be changed. It's not the case in Latin America, it's not the case in Asia, it's not the case in other parts of the world. So there is before us an important agenda of making things happen. What can we do to accelerate that process? We are, it's a trial and error process. What are we trying right now? I think one of the issues is the size of our market. We don't have a very large market if you take our country individually. It's clear that if you want to make money and bring large investors, it's important to expand the size of our market. So we are engaging more and more with the regional institution. We had a meeting in September with YMU and France and PPIF to try to start thinking about a roadmap to develop a common approach and capabilities on PPPs. Can we start having a kind of a regional framework, a regional legal framework which allow people to think about PPP not only for Senegal, Cote d'Ivoire, Togo, Benin, but for the WAMU zone as a whole, and therefore make it much easier and reduce the transaction cost for investors to look country by country and try to learn about their respective legal framework. But also to foster the inter-Africa investors, to have much more African investors investing in other African countries and facilitate that process. From the World Bank point of view, we have some more work to do. One of the things that we would like to do to work on is to accelerate the execution and increase the success rate of key projects and PPPs by taking a bit more risk on our balance sheet. So this is a conversation that we are starting now with our financial complex, is how the balance sheet of the World Bank could take a bit more risk in supporting some of these PPP operation and kind of modernize a little bit our instrument. Secondly, increase the scope of instruments that we can offer. Portfolio financing in local currency, swaps, this type of instruments that you are using every day, to see if we can also mirror them in our instrument to be able to match a little bit what you are doing. More guarantee, I hear that a lot. We did some PRGs, and there seems to be a lot of demand for PRGs. Right now, we are maxing the maximum of what you can offer for PRGs. So we have a conversation within the bank to see how we can better use our balance sheet to increase the level of PRGs so that you can support more PPPs. Last is to smooth the transition between IDA, which is our grant and low-income countries window, to IBRD, and try to make it a bit more of a continuum. Right now, there is a bit of a Chinese wall. You are either IDA or you are IBRD. We limit the access of those resources to our countries. So one of the conversations that we would like to start is to see, can we use a little bit more of IBRD type of resources, which are slightly more expensive, to support projects which have a higher rate of return, particularly in infrastructure, and therefore increase and accelerate the possibility either through an increased size of PRGs or equity participation in some of the project. So that's what I wanted just to put as a concrete ideas on the table, and I wanted to also by doing that, give confidence to institutional investors who start now accumulating a bit of money, such as, for instance, the Nigeria Pension Fund, which has a 20 billion in their coffer, which might be somehow, with the right condition, channels into productive projects. But they will not do it if they're not sure that there is a very high return and it's safe investment and which have the right guarantees. So if we start working on this issue, I think that will bring confidence to the institutional investors to start working in these areas. A bit long and passionate, but you know that I believe that is the way forward, and it's definitely somewhere where we have a lot of homework to do at the World Bank, and I would like really to hear what you want to make us accountable, and if the few ideas that I put on the table make sense for you, or is I'm totally out of how do you say, after work.
All right.
Okay. Thank you very much.
Thank you very much, Maktar. I think you've touched on the key points and really set the scene to ensure that we're going in the same direction. It's not about pace. I think it's really about understanding which direction we need to go and that we're always moving forward. And I think one of the key institutions that we've had the pleasure of working with over the years, led by Jean-Louis Ekra, the president of the African Export-Import Bank, in our view, has got a lot of insights and ideas. So I'm going to turn to you now, Jean-Louis, because I know that you're also pressed for time, to just really share your views on the types of facilities that you make available, how your institution can support project developers, the private sector in the continent, and what your view is overall on the next generation of private sector development and PPPs in Africa. Thank you.
Thank you very much. And I must say that I share most of the views that have been highlighted here by Maktar, because there are really two critical areas in our view, in our own experience. One is in the capacity building area, and the other one is in the financing. Now, in the capacity building area, we see so many times promoters coming to us saying, I have a project. And actually, when you read the document they bring to you, your understanding is that it's not a project, but simply an idea. Because before you move to a project, you need to do a proper feasibility study, and not a feasibility study for, let's say, development financing, but feasibility study that could be attractive to an investor. And if it is attractive to an investor, then it will be attractive to a bank. That's the first point. So there is a need here to develop capacity in that area, project preparation. Inside the banks too, we have issues of capacity building. You know, it takes a lot of technical approach to mitigate risk in project financing. And it's not the standard business of commercial banks. So our experience is that when a project like that comes, it's most of the time a learning process for the commercial bankers. And because they don't have the time to learn, they just rather put that kind of project away and deal with the standard bread and butter short-term commercial loans. So that's an area where I think with the help of the World Bank, we could cooperate and develop capacity in risk identification and also risk mitigation. It is quite critical. In the area of financing, like I said earlier, when you look at commercial banks' balance sheet in Africa, most of the time, they are short-term. So if you're talking about project financing, you're talking about PPPs and the like, you need medium-term to long-term money. And that is usually not available in our bank. I look at our recent experience with the privatization in the electricity sector in Nigeria. Many of those who were coming with those projects, we had really to coach them and support them in the presentation and the preparation of their offers. So there are areas like this which I believe we would need to build capacity. And I'm pleased also to see that we are trying to emphasize more on intra-Africa, because that's an area, and when you see the success of the Orascom or the Dangote of this world, this is, I think, an area that we need to continue to push. So I will be short on that because, as I mentioned to you, I have a few other engagements. So thank you for listening.
Thank you, John Louis. We appreciate your ideas and the clarity that you've given on the fact that we're on the right track and we're going in the right direction in terms of the issues we're taking forward through this platform. Another big issue, as we've been hearing, is not just the pension fund resources to support the continent's growth, but in particular the sovereign wealth fund assets that are being accumulated and playing a leadership role. So I'm going to call now on Uche Orji, the CEO of the Nigerian Sovereign Investment Authority, who is actually pioneering some new models where his fund, which he'll tell you more about, but it's young, but it's already changing the game by looking at early stage investments, taking that long-term view, whereas that's been a conversation hitherto. So I look forward to your views, Uche.
Sure. Thank you very much. Well, thank you very much, Hubert. Our perspective is more, I'll probably share with you what we are seeing with some of the transactions that have come through to us. I'll also respond to Mukhtar's comments earlier and say what we think the bank can do more to help drive some of these projects. We are new. We haven't made any commitment yet to infrastructure. We are about to, but let me give you a bit of a background about our fund, and so that it will help contextualize our role. We're a new fund set up late last year as a Nigeria Sovereign Investment Authority. We have $1 billion of seed capital, and we're going to deploy this across 3 funds. The first fund is the Stabilization Fund. The second fund is the Future Generations Fund, which is a classic savings fund. And then the third fund is a Nigeria Infrastructure Fund. And in trying to allocate capital across all 3 buckets, we've had to balance the need of the current generation, which is infrastructure, and the need of the future generation, which is savings. And so we've kind of allocated it equally between the 2 fund buckets and kept the Stabilization Fund at the minimum statutory allocation, which is 20%. Obviously, over time, as the government works through the 3 variables that drive our fund, we expect it to grow. And those 3 variables, obviously, oil price, oil production, and the benchmark rate for the budget. Now, in terms of infrastructure, which is really where I'm going to try and illustrate some of our experiences, there are probably 3 things that stand out. And I'll echo John Lewis's comment earlier, which is project preparation. Most of what we have had have been things that have come as ideas. And even on the PPP side, what we have seen is some of the projects are fast-tracked. And when it's fast-tracked, the reality is that many things are not done properly. And so we found ourselves having to now back into trying to prepare these projects. We've had to allocate 1.5% of our infrastructure fund into a project development fund to actually help get these projects over to the line where we think is bankable enough for us to invest and also get other people to invest. So we've had to do that. Along the lines of doing that, we've had conversations with the bank to help with this project preparation funding. Our feedback to the bank is that the process is very convoluted and very long. And because of some of the timelines we're working with, it's been a little bit more challenging to assess some of these funds. And so even understanding how the fund can be assessed is not that simple. So I think it's important that it's made clearer to people so that we know what can be accessible to us and how quickly that can be. So that's what I think, as a bank tries to navigate between IDA and IBRD. The most basic thing is just simplify the story so that people know what it is. The second thing that we have seen from our experience, and this is something we're taking a leadership role to try and address, is the question of how to attract other latent, I don't want to use the word latent actually, but other pools of capital that ideally should be in infrastructure but are not participating. And by that I'm talking about pension funds and insurance companies. What is obvious to a lot of these people is, right, they'll invest in bonds that are obviously credit enhanced. What are the credit enhancement instruments? Are they cheap enough for people to participate? And we're driving a conversation now about, trying to introduce such products locally within the country, in a way where the cost is actually not as expensive. And these are conversations which I think, obviously, now to your question, what the bank can do, a domestic solution to credit enhancement, I think, is very important. And we've seen it work in other places. Some of the things we've looked at are things that Indonesia has done as areas where we can actually use that to create a domestic market in project bonds that I think will effectively work. So it comes out, like I said, three things we have seen. One is obviously, accessing this project development funding. We have had to create some small pots to help, and obviously that's not something that is significant in itself. Maybe it gets us over the line on one or two projects, but not much more than that. But credit enhancement to attract that pools of capital is something that I think will be very useful in terms of addressing the landscape. Now, probably I'll leave my comments on when I look at what it takes in general to develop PPPs. I still think there's need for capacity building across the ministries that will drive PPPs. And here the bank has done an excellent job. I mean, teams led by some people in the room here from the bank have helped develop different pools of capacity and creating PPP units within the federal ministries that are driving them. We haven't got one at the federal level over the line yet, but when we do, I think that will serve as a template of how these things can work. And I think that this will be a big source of deal flow for a lot of people. Things that are coming, obviously, are still in segments that people view as very risky. Toll roads and toll bridges, those are very risky projects for a lot of external capital to invest in. And I think finding a way to de-risk some of those things or reduce the risk of some of those things are areas of collaboration between us and the bank. So the question I was put to me is, what do we need? I've kind of outlined it. A simplified way of accessing project development funding. Project development funding will be great to supplement what we have. Will be one. Two, a credit enhancement program that I think will help attract other pools of capital. And then finally, building capacity across the different parts of the government that's charged with PPP is very, very important, because even then, projects that come from them are not yet ready, and some of them are having to now be redeveloped by investors such as ourselves. So that's how we see our role, and maybe I'll just leave it here.
Okay. Thanks, Uche. That's some very concrete proposals put on the table there, and I'm sure that there's going to be a lot of questions later on that are going to address a number of those issues and through this dialogue platform. I'm now going to turn to Philip Suduza, Managing Director and CEO of UBA. We're talking about intra-African investment, we're talking about intra-African trade. Even when we have approached it from a mindset that that's what we want to do, there are some regulatory hurdles that prevent us, even those of us most willing, from achieving that. So one of the earlier dialogues that we had was really looking at the whole issues of capital controls within the continent that exist, where it was suggested that an international bank finds it easier to move money from outside the continent into and across the continent than a Pan-African bank from within the continent to a neighboring country. And those are so as we talk about intra-African investment, and we've got to be able to also look at the capital controls issue as part of the broader conversation. And that's why I'm so happy that we've got ministers, governors, and everyone, including the bank and the DFIs, involved and engaged in this conversation. But Phillips, I mean, as a Pan-African banking institution, focusing on PPPs, both retail banking and corporate banking, please, we'd welcome your views on this issue and how you're supporting the local private sector to develop and PPPs more generally.
Thank you so much, Herbert. And I also want to join Jean Ekra and what Uche said, about infrastructure financing and so on. Now, for us, UBA is a bank that operates in 19 African countries, and each of these countries, has its own regulations and laws. And in some instances, you have, some regional blocks that have, their own laws as well. For instance, in the CMAC region, in the Yumwa zone, and so on and so forth. And, recently what we had was a situation where it was very difficult for you to move capital across. For instance, if you are moving capital to stabilize or strengthen the subsidiary outside Nigeria, it was, a very big issue. And recently we were very, very glad when the Central Bank of Nigeria actually relaxed that particular regulation and so on. We've also had instances where, capital has been increased in certain countries and, made it discriminatory in nature. For instance, if you are a local bank, you have a different capital requirement. And if you are a foreign bank, regardless of whether you are from Africa or outside Africa, you have a different requirement. We have also had instances where capital increase, have been made discriminatory again in the sense that you have, very shorter period to meet that requirement, whereas local banks, have longer period to meet the requirements and so on. So all these have been some challenges that, we've been facing in dealing with investments across Africa and so on. Now, the other issue is, it was mentioned here that the intra-Africa trade, a lot of that, is informal in nature. And for a bank like UBA, what we have tried to do was, to develop some specific products to enable people to move, funds across, the borders and so on. One of the key issues that we have, one of the key challenges are things like, currency exposures and currency risks and so on and so forth. Now, for UBA, it has been some challenges, but somehow we've been able to overcome some of these challenges, which is, the reason why we are able to operate very well in the 19 African countries and so on. Coming to what the countries can do specifically and what World Bank can do, we believe that, the involvement of World Bank in some areas like partial risk guarantee, which was mentioned about here, is going to assist significantly. In the privatization of the power sector in Nigeria, UBA was able to do as much as about $700 million. And one of the reasons why we were able to provide that debt capital was because, we had the partial risk guarantee coming from World Bank and so on. So that to us, was some form of comfort. We also think that some form of risk sharing, participation from the likes of IFC and so on, we assist, in those areas as well. But most importantly was the issue that Jean Ekra mentioned, which is, the source of funding. You find out that as a commercial bank, that the balance sheet is such that your funding source are very, very short in nature. And most of the transactions here, funding in infrastructure, actually require long-term financing and so on. So to that extent, the banks will require some form of credit lines, from the multilateral agencies and institutions to fund those projects and so on. Thank you so much.
Thank you, Phillips. And again, it's a case of really looking at the specific resources that already exist in the market, and then maybe trying to be a bit innovative about how you can crowd them in to take a medium to long-term view on developing markets and creating opportunities. I recall in about 2009, we put out in the magazine, we put out a statement, in fact it made a cover story which basically says, time to come home, $520 billion of Africa's reserves that are sitting offshore, whilst we're looking for much smaller amounts of money to develop projects within the continent. And I know that this is a subject that's very close to the heart of the African Development Bank about how can we quantify the resources and deploy them better and take a longer term view, because we need new models basically. And it's about the perspective and the tenor of the approach that we take to build a private sector, to strengthen that private sector, and to continue to feed and build that capacity. So I'm very keen to hear, Tas, from you as the Director of Business Development at the ADB. And we hear a lot about Africa 50, we hear a lot about project preparation. Tell us what the strategy is in terms of PPPs and how you think the bank can really enhance that and cooperate on that agenda.
Okay, thank you. Well, after working all together in the infrastructure sector in Africa, today still we talk about every year we need 100 billion. And this morning I explained that actually 50 comes from public sector and development finance institutions, whereas private sector. However, all of us, we were trying to finance those projects. I think today we owe ourselves for a question. That question is, what is wrong? We all know what is wrong. We've been doing business in the same way for a very long time. And actually, all those products and the way of doing business came to an end. We have to change. We have to set up different type of partnership now. We work on a number of projects. I gave the statistics this morning. Out of 41 projects we financed in the last 5 years, only 3 of them went to the board approval in 2 months' time. The rest, we had to go back and restructure all of them. Very often when we sit around the table for loan negotiations, different institutions, like for example in Dakar projects, we had many parties around the table. Commercial banks, DFIs, private equity funds, everybody, they had different set of requirements. It takes very long time for us to come an agreement. Lake Turkana, Kenya, one of the largest wind farm in one location in the world. Economy scale, a wind project, 8 cents kilowatt hour. All of us, we cry for renewable energy projects. It was very difficult to put this project together. We were co-developer. We provided senior loan. We provided mezzanine. And we also provided PRG. That was the only way to make that project happen. So what I am trying to say here, project preparation is one of the most important things. Most of the time, when the projects, they come to us for financing, as it was said before, it is only an idea. And after that, you spend another 2.5 years to prepare those projects and make them bankable. We are not patient with each other. We don't respect one another's requirements. And we become stubborn around the negotiation table. This has to change. We deliver 41 game-changer projects in the continent, and we learn while we were delivering those projects. That's why we decided to come up with a new vehicle, a game-changer, Africa 50. Africa 50 will be pulling African resources together. We talk about institutional investments and where those institutional investments are today. If you look at Africa, central banks, pension funds, where they put their resources. Most of the time, they are invested in Europe or US. 2 weeks ago, there was a meeting in New York. All the African institutional investors, they made the same statement. Actually, we finance the infrastructure in the United States or in Europe. Those resources need to come back home. We've been working with some pension funds in Nigeria. It took 1 year to bring those pension funds to comfort level for them to invest in an infrastructure private equity fund. But it was a very important stepstone because we know that that will be replicated now. Where I am going with all these statements, we would like to make sure that Africa 50 will be a structured credit vehicle, commercial, efficient, and for Africa, by Africans, means that at least 70% of the equity will be coming from African resources. Today, one of the biggest issues is the creating a pipeline for this kind of structured credit vehicles. Therefore, we are determined to create a large project development component. As I mentioned this morning, $500 million. We believe that with that $500 million vehicle, we will be facilitating at least $50 billion projects. Once Africa 50 is operational and up running, I asked Mr. Diop to partner with us to develop those projects and finance those projects. Because Africa 50 will be the first stepstone of African partnership. Africa 50 will be creating opportunities for everyone, for private companies, for governments, for financial institutions, and insurance companies. We can count more. Earlier, Mr. Diop asked one question. He said that why private sector is not initiating PPPs? We have to realize that most of the time, when private sector initiates PPP projects, we ask them the question when we are going to finance those projects, what was the procurement process? Isn't that? Most of the time, those projects, they basically stay unfinanced very long time because they were prepared bilaterally. So let's look at our procurement rules. How we can overcome these obstacles? Under Africa 50, we tend to do the business differently. If projects are prepared bilaterally, there are benchmarking processes. We can consider them. In fact, we've been trying our experiences in Senegal, and replicating in different places. As I mentioned this morning, we are the advisor of Tunisian government and government of Mauritius in terms of preparation of PPP projects. Now, under Africa 50, we would like to offer this to other governments as well. The whole idea is increasing the number of transformational infrastructure projects in the continent and bringing them to the bankability and making sure that we are going to finance and co-finance those projects from traditional and non-traditional resources. Thank you.
Thank you very much, Taz. I'm now going to pass to our co-chair, Maktar, who will address the questions to the ministers that we have on the panel.
Thank you very much. We have two ministers. One of them who was recently leading one of the investment agencies, the one who prepares the toll road for Dakar, Jean Faber-Sarr, who is now Minister. Congratulations, Mr. Sarr, for your recent appointment. And we have the Vice Prime Minister, Xavier Duval, from Mauritius. And to both of them, we would like to ask, and may say start with the Vice Prime Minister, asking him what you want to bring the private sector more. And you as the public sector, I think that we pass the debate in Africa or between the private sector versus public sector. Everybody now wants to crowd into the private sector. What are the obstacles that you are facing as policymaker in bringing more of the private sector on board?
Thank you, Mukhtar. I think from the point of view of the government of Mauritius, and it must be the same thing all across the continent, is that our infrastructure needs are very, very large. And generally speaking, our GDP base is very low. So the gap, the financing gap, tends to be very high. If we take the case of Mauritius, over the next 10 years, say, if we were to finance our infrastructure needs ourselves, we'd probably double our public sector debt. And we wouldn't want to do that. So we need to finance some of it internally and most of it from the private sector. So obviously, therefore, the first reason why we would turn to PPP is to provide capital so that we can proceed with our projects. The second reason we find is that sometimes projects are better implemented by people who are specialized in the sector. If you want to build an airport, you probably want to talk to people who are building airports every day. The same thing for our port. We tend to think that if you have a specialized port operator, you probably have better chance of getting it right. And also the procurement for the private sector, usually much faster than the procurement, at least for our government. So that is also a second reason. And the third thing is that often these are purely commercial ventures, and that commercial ventures are better operated by the private sector than the government. So there are a number of reasons why we turn to the private sector. But I think we should not underestimate the difficulties in getting it right. I mean, in Mauritius, we haven't really been successful yet. We are trying very hard with the ADB, with the World Bank, etc. And we've got one or two projects coming very nearly to fruition in the next few months. But one thing we found is that the question of capacity building is crucial. We don't have enough capacity in governments. We need to have the appropriate legislation, and that is, we've changed our legislation in Mauritius, I think, 3 or 4 times, and it perhaps is still not perfect. We need to understand also the need of how to share the risk between the private sector and the government. One way of sharing risk perhaps is for the government to take on the financing risk and borrow the money and then pass it on to the private sector, and for the private sector to undertake the commercial risk of operating. But we found in Mauritius at least that this has the same effect on our public debt as anything else. So that sometimes it cannot be accessed in this way. Perhaps one way of sharing the risk is to guarantee the income. And in fact, for our road development project, also for the light railway, what the government of Mauritius will be doing is be guaranteeing from public funds part of the income for the project. So at least the private sector knows that some money is available, will be available as things go on. I must say also that since you're here, Mukhtar, that we are really counting on the World Bank, on the ADB, etc., to help us. I think this is one area where we need help all through. It's not only capacity building, it's to get, throughout the entire process, we need help to get the framework right. For instance, we are now going for oil and gas exploration. We need to make sure that our framework is right, that the taxation is competitive, that it is transparent, there's a transparent process, that we are sure that we get the right value for money for the taxpayer, and also that the environment is protected. These are very technical issues that we need people who know the business to help us out. So just to finish, perhaps, it's a tricky issue, PPPs. It sounds easier than it actually is. And to get it right, it's crucial. I mean, we've seen around everywhere around the world, governments get it wrong, and then it's the country that suffers. If you are too strict and you're overprotective of your assets, you don't find any bidder. Nobody comes up from the private sector to bid. If you are too lax, then you're losing money and you're wasting funds. So we need to get it right, and we need to get it done fast. And it's something that we feel we do need help all along the way, and we're grateful for the help that we're getting. Thank you very much.
Thank you very much for these very insightful views. And I think that one point you made very, very strongly is that PPP is complex. And also part of the world have tried it. I worked in Latin America. There were a lot of attempts to do PPPs. We didn't work well. We talk about success stories of other parts of the world, but we often don't talk about the difficulties they faced. So we can be harsh of ourselves, but we should accept that this business will be trial and error, and we'll be finding our way as we. And I think that Tas made a very strong point about how we can mobilize all these resources. But I think it would be also, as you rightly said, difficult to think that it will be a journey that we will try without making mistakes. We have mistakes, we have to live with that. The rest of the world made them, but we just have to accept it and move forward, and not be immobilized by our mistakes. Minister Sarr, please.
Merci. Chers compatriotes. Ce matin, j'étais là avec un anglais éprouvant. Et je suis revenu sur la même place, quand même pour dire les mêmes choses. Il s'agissait de mon pays, le Sénégal, où je devais le décrire en matière donc, de climat des affaires. Je disais ce matin que le Sénégal, par sa position géographique, est à 4 heures de l'Europe et à 8 heures des États-Unis. Ce qui fait de lui un pays qui s'est placé géographiquement d'une manière très attrayante pour les investisseurs. Mon pays est réputé par sa démocratie aussi, une vieille démocratie, et sa stabilité politique. Il est le seul pays africain à ne pas connaître un coup d'État. Je pense que ça, c'est très important pour les investisseurs, parce qu'ils ont besoin quand même de connaître l'avenir de leur investissement. Donc, en matière d'investissement, on parle toujours de confiance, de compétitivité et de croissance, que j'appelle les 3C. Deuxième pays de l'IOMA, en matière de poids économique aussi, parce que, vous savez, le Sénégal est deuxième de l'IOMA, quatrième de la CEDEAO et huitième en Afrique en matière de poids économique mesuré par son PIB, ça veut dire son PIB, la somme des valeurs ajoutées. Les investissements directs au Sénégal sont de 487 milliards par rapport à 2011 qui était à 66 milliards. Donc un grand pas, je pense que les investissements directs étrangers ont doublé. L'année 2012 est donc du fait des actes posés par le président Macky Sall, je pense, a fait que tous les investissements sont venus en affluence au Sénégal. Et ces actes-là, on peut les énumérer par ce que j'appelle l'OFNAC, l'Office national anticorruption, et la CREI, la Cour de répression de l'enrichissement illicite. Tout cela donc, a participé donc, à l'affluence des investisseurs dans notre pays. En dehors des actes qui ont été posés par le président de la République, le Sénégal a fait beaucoup de choses en matière donc, de climat des affaires. Pour la création d'entreprises au Sénégal, l'entreprise ne se crée plus en 48 heures, mais en 24 heures. Et d'ici le mois de décembre, l'entreprise sera créée en ligne. On peut être aux États-Unis et créer directement l'entreprise au Sénégal. Le permis de construire, là aussi, nous avions connu quand même des ralentissements à cause peut-être d'une certaine méconnaissance de l'intérêt du permis de construire dans le climat des affaires. actuellement, nous avons le permis de construire en 3 phases. Il y a l'instruction technique, il y a la signature du maire et celui du préfet. Alors donc, nous avons gagné actuellement 90 jours en matière de permis de construire. Le paiement de taxes aussi, nous avons pu distinguer les moyennes et grandes entreprises qui font leur déclaration de TVA directement par le site web du DIGID, ça veut dire le ministère des Finances, par les domaines bien entendu. Et maintenant, les PME aussi payent trimestriellement leur TVA, ce qu'on appelle réel simplifié. Ça veut dire que toute entreprise dont le chiffre d'affaires est inférieur à 100 milliards paye directement une taxe une fois par trimestre et puis c'est terminé. Là aussi, nous avons gagné 52 jours.
Honourable Minister, if I can just say that I think you've caught the whole issue around the business environment to the point where we can really now take the opportunity to open up the questions, because I know that there's a lot of interest in your specific PPP projects that you personally champion. So in the interest of time, if I can then perhaps open the floor for questions. Mukhtar has to leave, but we are able to take 2 questions. So if we have microphones, the first 2 hands up, get the first 2 questions. These are questions specifically directed to Mukhtar.
En matière de transfert de propriété aussi, avant de venir au PPP, c'est ça qui nous intéresse directement, parce que vous savez, j'ai été primé en matière de PPP à Paris récemment, donc pour ce type de financement qui est un financement alternatif innovant. En matière de transfert de propriété, je disais tout à l'heure que maintenant la demande de transaction est simplifiée au Sénégal. Nous avons gagné 52 jours et les procédures fusionnelles ont été adoptées entre l'enrichissement du droit réel et donc la publicité. En matière du Code général des impôts aussi, beaucoup de choses ont été faites. Le Code général des impôts au Sénégal a été innové et quand même a permis à l'investisseur d'avoir beaucoup de bénéfices sur ça. La justice commerciale aussi, là aussi en matière de justice commerciale, des chambres commerciales ont été créées au Sénégal pour pouvoir régler les problèmes de contentieux qui étaient nés donc, avec les investisseurs. Un décret a été ratifié récemment avec le président de la République. Maintenant, il y a l'amélioration de la compétitivité des facteurs de production, l'électricité, les ressources humaines, etc. Maintenant, sont une priorité pour l'État, vraiment pour régler ces problèmes de l'amélioration. Maintenant, il y a la promotion de l'investissement à fort impact social dans les pôles économiques. Tout ceci rentre dans le cadre de l'assainissement du climat des affaires au Sénégal. Maintenant, ce qui nous intéresse, c'est la mise en place d'un dispositif juridique fiscal, incitatif et simplifié. Je dirais la rénovation de la politique et de la loi des partenariats publics-privés. Vous savez, le Sénégal est le premier pays à pouvoir instruire ce qu'on appelle les PPP par le biais de l'autoroute à péage.
Thank you very much, and I think we'll take that as the first question well answered. I'm going to now turn to Sunil Benimadu, who chairs the African Capital Markets and Stock Exchanges Association, because as we look for innovative and creative solutions, and we look at sort of international models around developing infrastructure projects, we often turn to a sort of very well-known household brand that sort of plays in this area called Macquarie out of Australia. And one of the things that they're known for, besides making their staff millionaires, I think everyone says if you work for Macquarie, you're destined to become, or you already are, a multimillionaire through infrastructure and innovative approaches. Their approach typically is to establish infrastructure funds and then list their portfolios down the line, bringing additional products and opportunities for this particular asset class to develop local capital markets. I just think that in this area, I know that the capital markets across Africa are always looking for new products, and it'll be curious and interesting to learn from you, Sunil. Do you see the capital markets playing a more catalytic role, maybe in a similar way or maybe in a different way? I'd like to ask you that question.
Please, yes.
If you have a mic.
Thank you, Hubert. It seems that you're extending the panel to the floor.
Right.
But I would try to take this question. I'm not a specialist in PPP, but given the question that you've asked, how can capital markets be supportive of PPP in infrastructure in Africa? I think maybe there might be some innovative way of going about financing infrastructure or other types of sectors within Africa. I think that there might be the need to create a special purpose vehicle where a private sector entity willing to support the PPP would put in equity capital to fund this. And then from the government standpoint, government could either through debt raise the money or invite the public, I mean institutions. When I'm talking about public, I'm talking about institutions first, get their buy-in to the project, get them to fund the project through the creation of a debt instrument that maybe government may need to provide some form of guarantee. And then this could also be extended to other investors within a country to bring in their support. And that's where maybe the guarantee of government could come into play. So government would not put the money up front, but would support the issue of a debt instrument indirectly. And then this could be listed. So that's where the capital markets would come into play in terms of bringing their contribution to the funding for high PPP projects. And I guess for regional projects, this could be extended not only to institutions and investors within a country, could be extended to investors within the region, and by aiming at pension funds and others. That's my initial reaction, but of course, as I said, I'm not a specialist in PPP, but I think there is some innovative way of looking at how things could be delivered on that front.
A very interesting idea. I don't know if, Gabe, you have any views, heading the private sector development department in the Africa region, to react to that?
I think what's being suggested is a sort of intermediate step, as it were, of getting to infrastructure class of bonds. So I think part of the challenge right now, and maybe this is sort of bridging the conversation between the financing needs and what needs to happen on the project side. I think part of the challenge is obviously de-risking these projects so that different classes of investors, based on their risk profile, can all participate. And eventually, unless you have an infrastructure class of bonds that have been appropriately de-risked to allow pension funds and sovereign wealth funds to participate, that will be the challenge. But I guess what he's suggesting as a special purpose vehicle type of an instrument would be sort of an intermediate step going in that direction. That's how I understood it, so it's a good idea.
Fantastic. Are there any other questions? Okay, we have a question from Mohammed over there.
I'm wondering, as Africa has quite an interesting experience with commercial law harmonization with UADA, why cannot Africa develop something similar for PPPs rather than spending time and energy developing for each country more or less the same thing? Really, if you look at East Africa and you look at the different frameworks, Ghana, Tanzania, Kenya, there are differences, but I think one could develop really something Pan-African or regional and save a lot of time. The problem, I think, is that I'm asking this for, raising the question for especially the World Bank. Most of the institutions, the donors, have been working at the national level and not at the regional level. And that explains also why there hasn't been really pressure to do something like this. Is this going to change, or is it possible? Is it desirable? This is the question.
Sure, I think that's a very important point you're raising. And in fact, we have begun to start moving in this direction to assist the regional economic communities to begin thinking about sub-regional frameworks as sort of a step towards eventually a regional framework. And so I think what Makhtar was describing earlier was as part of this process, the WEMU ministers met to look at, well, how do we harmonize PPP frameworks? And this happened in September. We've also done some work last year with the East African community in a similar way to look at really what are the differences between PPP frameworks across countries as a way of harmonization, but more importantly, because many of the investment opportunities in energy in particular are cross-border in nature, by definition you would be dealing with regulatory frameworks across countries. So I think this work has begun, and certainly we would welcome further involvement in doing this for other regional groupings in Africa. But I think that the work that started in these two areas may well give us some insights into what might be some of the challenges of harmonizing, essentially concessioning frameworks across countries in a sub-region.
Any other questions? Barbara? Okay.
Thank you. Barbara Samuels, Global Clearinghouse for Development Finance. It seems that this discussion has very much centered around PPPs, and I wonder if we shouldn't beg the question of making it wider. Because of course, and stay within, if you want, the area of infrastructure, including industrial infrastructure, value addition, for example, and agricultural processing, which is so key to the future of Africa and the world. So there's this whole area where if one is able to build on the initiative of the private sector, you can get much quicker results than the history of PPPs would indicate. So, for example, look at Uganda, the industrial promotion services, the Aga Khan guys. You know, they have been trying to do a mini hydro in Arua, which has taken a huge amount of time to get done. Why? Because it is simply not economic to pay. There is a study, the estimated cost is $400,000. So we're back to what we've talked about time and time again. Here you have a major project sponsor that's very strong, that is not getting a project that is absolutely fundamental to private sector development done in part of the country because of a lack of funding of that. So, you know, can we think a little bit about the non-PPPs and how some of the project sponsors out there, some of them in country, some outside, can work with the World Bank Group and other development partners in the government. The other, you know, in agriculture again, there's a lot of projects where if you take a project finance approach, and I think the point on capacity building and project finance that Jean-Louis made is absolutely critical to getting the local banks to be able to fund on a non-recourse basis with ring-fenced revenues. What can we really do to build up capacity there? Again, building local technical service providers, the consultants and the like. What do we do to move forward in those non-PPP areas? Thank you.
Would one of our panel like to take this question? I think, Phillips, this might be something that you've had to look at or have to look at now.
Okay, thank you. Very, very good comment. And it is quite correct that the private sector, you know, is more efficient and more productive than the public sector and have been very, very successful. I think, you know, it's a very good point and well noted. I know some private sector entities, and we have a typical one, you know, starting from Nigeria, that is investing across, you know, various sectors, including infrastructure across Africa and so on. And that is, you know, the Hess Holdings. And to a very large extent, we have already started seeing the benefits of that. And what they have done in some areas, you know, was to collaborate with the government. For instance, in the government of Rwanda, we saw the commodity exchange, you know, set up, you know, by this particular entity in collaboration with the government of Rwanda, and it's turning out to be quite good and so on. So it's something that is worth looking at. We have also seen a very major name in the manufacturing sector, which is a Dangote group that has been investing across Africa, and also that is very, very successful. So I think it's something that is worth looking at, and I believe that it will be more efficient and more productive to drive it from the private sector as against looking at the PPP, which every person is talking about. Thanks.
2 more questions.
I believe we talk a lot about PPPs like a new way of funding. I believe the main point of PPPs is to provide public service, and to do so through public defending public interest. I think the main point for the private sector to react is to clearly understand what the priorities are in each country. We have to understand that PPPs have been used on the oil and gas industry for quite some times, and they don't have any problem on being implemented. When we go to energy, a lot of times it's fairly easy. It's when we go to social infrastructure, roads, water, where it's much harder to get these PPPs implemented. And so my question is, shouldn't we focus about defining the priority projects on each country, and then assembling the financial providers and the developers to implement those projects? So instead of looking where is the money, is where are the priority projects that need to be implemented? I think if we go this way, we will be much more successful, and we will avoid the discussion on how much does it cost, what, who is going to be involved. We have to understand that a PPP in Saudi Arabia is eventually about providing technology, and in a different country is about providing funds and technology. And so the main question is, let's focus on what are the priority projects for the different countries, and then present these clearly, and have the private sector and the private investors and the private financiers coming in.
Thank you. I think, Taz, you're very well placed to answer this one.
Okay, yeah. I'm going to come back to actually the Senegal experience. I believe that this model is a very good model and should be replicated all over Africa. Because when we first started working in Senegal, actually, out of those 4 projects, we were lead arranger, mandated lead arranger for 3 of them, for the airport, for Sendu power plant, and for the port. When we start our discussions with the investors, then we involve the government, they came with a long list of projects. We selected most important 4 projects. If you look at those 4 projects, the airport, the toll road, and the power plant, and the port, they are complementary. You have an airport, which is 56 kilometers outside Dakar city, but my first trip to the new airport site was 4.5 hours. So I came back and I asked them, who's going to take this airport? Then they said, we have a toll road project. Today, actually, that toll road is operational, and it is less than 49 minutes. Airport needed power. They came with the idea, oh, we are going to have extra generators. No, we need a power plant. The investor for the power plant, they were negotiating the PPA, but it was not going anywhere. We immediately stepped in. We looked at number of different PPAs the country signed before. We found out that first one was extremely investor-friendly and extremely government and country unfriendly. Second one was a little bit 50-50. And the third one, we sat on the table as the honest broker between the parties, and we developed a very good PPA. This project was very important, not only for the airport, for the country itself, because it was 8 hours a day electricity cut. In fact, it was a very good partnership with the World Bank, because when I started working on that project, World Bank called me and they said, could you please finance this project? Because you know that nobody wants to do a coal power plant. So World Bank shared the sector restructuring financial model with us so we can go back and convince everyone. Then, as all of us we know, Senegal doesn't have hydropower resources, Senegal doesn't have gas, Senegal doesn't have any base load in terms of except coal. So coal comes from South Africa. You had no other choice but expand the port. So that's how actually all those projects happen. But when you look at today in Senegal, actually an infrastructure backbone is created. So a lot of people might see this as national infrastructure backbone, and maybe we can all say that those projects are national, but they are not. Because today we are looking at the Dakar-Bamako railway, and a landlocked country will be connected to port through this railway. And they will have access to the airport, they will have access to port. What was behind this? Actually, it was vision, and it was strategy, it was working together. So we have to replicate those national projects, but we have to also have a way of connecting them and turning them into regional projects.
I think, Gabe, I've heard the word World Bank mentioned too much in that response. Surely over to you.
Well, before I do that, I don't know whether the minister from Senegal wants to say a few words, since the example was...
Okay. Minister, the floor is yours.
Sur les projets PPP, voilà. Moi, ce que je disais que le partenariat public-privé est un financement innovant et alternatif qui vient au secours aux pays sous-développés. Parce que vous savez, les pays sous-développés n'ont pas de moyens. Si vous voyez, leur budget consolidé d'investissement n'est pas très important. Par exemple, le Sénégal a un budget consolidé d'investissement de 400 milliards qui ne peut pas financer un projet structurant. Et là, les PPP viennent au secours pour vraiment financer ces projets comme l'autoroute. L'autoroute a été financée pour 384 milliards et donc l'État a mis 126 milliards et le reste, c'est les concessions, les privés et des banques. Et vous savez, c'est une réussite totale parce que je disais que les PPP sont très importantes dans la mesure où le risque est transféré aux concessionnaires. Et donc, il y a la maintenance et l'entretien pendant la durée de vie de l'infrastructure. Tout cela est très important parce que sinon, les pays africains ne peuvent pas faire des projets structurants qui répondent aux normes internationales. Et justement, l'autoroute, maintenant, à Dakar, répond aux normes internationales. Si vous allez à Paris ou aux États-Unis, vous avez vu les mêmes autoroutes. Et ça qui est important, parce que je l'ai dit tout à l'heure, et que c'est un oxygène financier, les PPP, et je pense que c'est très important que les pays africains l'adoptent pour quand même réussir leurs projets. Voilà ce que je voudrais dire comme message.
Fantastic. After you, Gabe.
Yeah, no, thanks. I was going to say that maybe our colleague from Mauritius can also speak, I think, to another important element that was raised in that question, which is really the link between public investment management and the origination of sort of the deal flow of PPPs.
Yes, as I mentioned, there's no way in Mauritius, as my colleague, the minister from Senegal said, there's no way that we can finance from our own funds the huge investments that are required. Mauritius is a small country, but still we have a lot of investment. We just have a new airport, a new air terminal. We have a very large road development project of 1 billion euros. We have a light railway project coming up. We have the port that is being deepened and lengthened, etc. These are huge projects. Yeah, in the power sector also, we have a 100 megawatt power plant coming up. These are huge projects which, if you were just to count on the government budget, you would not be able to finance. You would need to postpone. So we are thankful for PPP. Thank you.
Any other questions? Okay, Taz?
Yeah. Actually, I think someone from the floor asked why we are talking about always PPPs. For some reason, conversation came to the PPPs, but of course we are doing different type of projects as well. You mentioned how we can keep some of the resources in the continent itself. We have a very interesting project actually. Currently in one country, manganese is actually mined and transferred to Asia for processing. From Asia is exported to all over the world. This project requires $1.5 billion because the project requires 400 megawatt power plant. So we are working on it now, and we would like to make sure that in the next 5 years, manganese will be processed in this specific country and will be exported from this specific country. Obviously, this is going to create jobs. This is going to create value-added processing in the country, and it will keep the resources in the country.
Very interesting. I have one question, actually, I'd like to pose to Uchi, just really looking at the sort of private sector innovations. And really, it's just really to get some clarity about, is the issue a finance and investment issue in terms of project preparation and development, in your opinion? Because you're saying you're taking 1% or committing 1% or 1.5% of your fund to project development. And one of the things we always hear is there aren't the projects. But are you finding that there are the project developers and there are enough project developer teams that you can back with that 1%, and in anticipation that you're going to grow the fund, therefore you're going to have more resources available? Are there the developers in your estimation?
Sure. There are developers. Now, whether there are the type of developers you're willing to bank on, it's a little tricky. I'll give you an example. There was this case of this project where the traffic study, for example, came back with a certain number. I was like, this number doesn't quite work. And the question was, what number do you need to make it work? So there's a number. And so the question is, that's really, extreme example of the type of experience that you have, where in terms, as part of project development cycle, you have a team that is not really quite the quality that you can trust their work. And so the question is, to do that, you now have to engage other people to try and grow the skill set necessary to do. And this is where this 1.5% is going,
yes,
is making sure certain key elements of making the project bankable is fixed.
Right.
So to do that, obviously, it's going to be very expensive because you have to supplement that skill set with some imported skill sets to make it work. And this is really part of where we're seeing the effort. Look, again, I'm sorry that we're going back to the whole subject of PPP, but the reason this is because this is really topical right now in Africa, but also the government still remains the biggest source of transactions. And I think this is something that will unlock capital and build a new backbone. So where we're seeing some of these challenges is in these areas where there are more government-type projects. That's where you're seeing the need for specific, more enhanced project preparation investments. But that doesn't mean the private sector is completely immune to this as well, because some of the private sector projects we have seen also needed a little bit more enhancement, more project preparation, but the investment there is actually very small. Now, the psychology, however, is, look, project development is, for us, an investment. It's not a grant scheme that people are asking for. It's something that you obviously recoup when you get to financial close. So it's just making sure that the project gets to the point where a very great idea doesn't just die because we are not able to get it over the line. So this is why we're spending money in trying to make sure that some of these things are very, very well developed. And it's just across the studies needed to make sure the project works, to actually paying for certain key aspects of what is needed to make the project bankable, be it hydrological surveys or be it traffic. So some of the things that ideally government should have done, quite frankly, before bringing the project to the table are the things that we're finding ourselves having to now try and spend money to make sure that is done. So, but I just want to make a point that I didn't make earlier, which is our philosophy around this is it's an investment as well. It's an investment, very risky investment, because obviously at the end of the day, it might just turn out that the thing doesn't work. But it's an investment that we intend to recoup by the time we get the project over the line. It's forcing us, obviously, to be careful what we select to do, but to make sure, the idea is to make sure that good ideas do not die because they weren't properly prepared. And I think the challenge here, obviously, and this is why we are taking some of the leadership role in this, is to the extent that we can, it's been a question of who takes this on. Mm-hmm. A good idea has come from a PPP unit of some government, and the question is now who's going to do this, and this is why we realize that we have to step into that gap, right, and try and drive it. But it's something that I think needs wide-ranging support. Because, like I said, from our perspective, it's still very small in terms of what the pool of capital can actually achieve.
Do you think, would you recommend this model to other funds looking to set up infrastructure or allocate to infrastructure?
In Africa, yes, certainly. Because we've also seen that that's what some of the, again, not all sovereign wealth funds have an infrastructure mandate. Most sovereign wealth funds tend to have two mandates, stabilization and savings. The few that do have more than that end up with an infrastructure mandate like we do. But that's really very small. But if you saw what happened in some places, like even when the early stages of Kazana, they had to do some of those things, and some other people did things like that to kind of make sure that you can get the project over the line. But by the time you get 1 or 2 or 3 done, you set a template that actually starts to work a lot more smoothly. So I would recommend it to, we didn't start out thinking we will do this. It was as we started to examine the pipeline that we realized we had to do this. That's really how it started.
I mean, that's really been our experience over the last sort of 10 years where speaking with the investment community that sort of focus on infrastructure, I mean, the conversation and the focus has changed dramatically.
Yes.
10 years ago, we are a fund, we're going to invest in infrastructure, we're not going to rewrite anybody's business plan, we want bankable deals. Reality is they couldn't deploy that capital. So now we think that the mindset is changing, and I think that particular model is very encouraging because it weeds out the projects that are suited to the private sector from an investment standpoint, and I think that's definitely a model that we would encourage as well from private institutions and institutional investors looking to participate in infrastructure investments. Superb. I think we're about to wrap up now. I'm going to pass you over to my new co-chair, Gabe Tata, to just give some final words. Thank you.
Yes. Thank you. I think the conversation today is sort of beginning to narrow down to some very specific sort of tangible areas to focus on. I just want to highlight, obviously, that as one of the questions that was raised is that PPPs is really a technique that can be applied to a variety of different sectors. We've discussed it in the context of infrastructure, but in fact, I think a lot of the work that, at least on the World Bank side, we're doing over the last few years is to find ways to apply this technique also to agribusiness, where a lot of the opportunities, because land is involved, will originate from the government, and then you have to structure and package the deal in order to bring the private sector in. And so we've applied this technique to a variety of projects in several countries, ranging from Burkina Faso and Ghana to Mozambique, DRC, range of countries. So I think the key challenges that we face there, which we're also seeing in the national level and regional level efforts we are making to work on PPPs and infrastructure, relate to ensuring that you get a systematic sort of flow of deals. So it's a programmatic approach, and as part of the first step of harmonizing regional frameworks legally, I think the next logical step is really to have sort of an agreed list of regional programs and projects that can be built as the program on which to bring together the public and the private sector. With regard to the financing instruments, I think this is a challenge. Makhtar described some of the areas that we are looking at to try and leverage more the available funding, risk sharing instruments, and so on, as a way of increasing the private flow of funding to match that as well. And so this capacity, the deal flow, and the financing, I think, are the 3 areas that we've been focusing this conversation on over the last couple of years. Yeah. I think we're getting into much more tangible areas, and I think maybe when we come back to take stock of this again, we should, in the interim, again, make further progress on these 3 elements of working with the regional economic communities, working with the financing community, and working with the project development community.
Fantastic. That's excellent. And from Africa Investors' side, we are going to continue to work on the pension and the sovereign wealth fund piece. One of the specific areas we continue to hear is the understanding about the risk profile of investing in infrastructure in Africa, to the point where we heard one pension fund basically raised the issue of corruption. Then I asked them, what sort of corruption are you referring to? And they said, oh, it's the manager. We don't know the managers. Whereas the previous perception is we're talking about the political climate. So we're now moving into a space where we're getting more granular. So one of the areas that we're going to take forward, working with the friends like Uchi and some other sovereign wealth funds from around the world and other pension funds who have said our retirees are insisting that we participate in infrastructure investments on the continent. How can we do it? So we're looking at a fiduciary rating instrument which basically catalogs and profiles the third-party custodians of capital so that it's easier for these institutions to be able to rate, assess, compare and deploy capital. So that's really our takeaway from the fourth strategic dialogue about how to crowd in sovereign wealth. And as part of this initiative, we're actually going to have a council of investors that will be providing guidance and advice to say, these are the types of transactions, this is what we're looking for. Please do not bring us anything else. And that's how we're going to try to use it to focus and create some pilots. In terms of the sort of next steps and the venues, all eyes for this particular platform in terms of the next dialogue is going to be in the spring meetings. We'll be working hard and be in contact with each of you on some of these issues between now and then. We'll then be taking the infrastructure conversation to Abuja, running alongside the World Economic Forum on Africa. We will be hosting, again, another CEO dialogue focusing very specifically on key constituencies. The constituency that is interested in allocating capital to infrastructure, but also how do we begin to crowd in the project. First of all, identify the project developers. We did a piece of work where we had to identify 100 project developers from Africa. It was a very long project, a very, very long project, and now the list has become sort of golden. I think there are many more, and I think the more we can begin to identify and shine the light on them, the more Uchi's goal of encouraging other institutions to create resources to support and build them, because that is the private sector. It is not a technical assistance facility that has fly in and fly out consultants. It is the companies that are investing their time, resources, and innovation in developing those projects, and ultimately they're going to be the job creators going forward. So that's what we're going to be focusing on in May in Abuja. And finally, I know that you're all avid Africa Investor readers, so we're going to put together some form of summary of this just to keep the conversation going and to disseminate it more broadly. But in closing, I'd like to thank all of our panelists. You've been superb. You've stayed committed, and we're definitely going to be drawing on your commitment going forward. And thank you all for being a great audience.
Doing business in Africa. You can't afford to be without Africa Investor.